All right. Matt, the mortgage guy. Going through divorce can be painful. It can be stressful. It can be a whole bunch of things. It can be confusing. Your mortgage options, I hope to clarify today in today's video. Unfortunately, it's a topic that I get to hear a lot about, and I get to have a lot of conversations with different folks around what they're doing with the house during divorce, whether that's sell, whether that's keep it, whether that's do a rate and term refinance, whether it's cash out refinance. In today's video, I'm going to go over all those different options, some scenarios of what I've seen, what people have done, hopefully help you out during this, what could be a difficult time. All right, Matt, the mortgage guy here. I do mortgages all day, every day. I talk to people all day, every day. So hopefully I can bring you some good advice that's going to help you no matter where you're at, no matter what you're doing. In this specific case, I'm talking to folks who are going through divorce and they've got things to sort out, right? During this time where they're figuring out the MSA, the agreement on which they're going to agree. They have a mortgage, they have a house. One spouse is owed X amount of dollars. So I'm just going to go through a couple different options, what you may or may not know about what can be done in these different options. So I think first and foremost, there's a refinance to take somebody off of the title and off of the loan, which is a common option when, let's say, you've got a little bit of equity in the home. Maybe there's $30,000 in equity, and you've also got $30,000 in a retirement account. And you guys come to the agreement that one party is going to keep the retirement account. The other party is going to keep the house because it's got $30,000 in equity. You get this, you get this. It's an even swap. Go on your way. Happily ever after is the hope, right? And so that's one case. What happens is whoever's going to stay needs to be able to qualify for the mortgage. If you guys bought it jointly and you guys are both on title and both on the mortgage, in order to take a spouse off, in order to, not just do that on the title of the home, but also on the mortgage so that both people aren't liable for that payment, the spouse who's staying and keeping the house is going to need to qualify. If you don't qualify, here's something I will tell you. I've seen plenty of settlement agreements where one spouse keeps it and it's clear in the settlement agreement, this spouse is keeping the mortgage. They're eligible, or they're responsible for making the payment, because then what happens down the road is spouse that left the home goes out and tries to buy a home of their own, which you can. And the trick to it is when you go to qualify, 12 months later, you show a payment history from the spouse that stayed here and go, look, they're paying the payment, and look at the settlement agreement. They've agreed. This is their property and they're paying the payment. It shouldn't be included in my debts, right? And most lenders are going to be okay with that. So that's one scenario. Another scenario might be a majority of the assets that are being divided between the two spouses who are divorcing are in the house, right? The house has got $200,000 in equity. Other stuff is split. Now you got to split this $200,000 in equity. A cash out refinance is an option for that. And in this case, what hopefully can happen is the spouse that's staying, and let's give a simple example. We've got a $400,000 house with $200,000 in debt. So there's $100,000 in equity. I'm sorry, $200,000 in equity. Each party is entitled to $100,000. Whoever's staying might do a cash out refinance up to $300,000, get that $100,000 in equity, give it to the spouse who's owed it. Now they have a new mortgage of $300,000. They stay living in this house that's worth $400,000. Their equity is essentially still in the house. The partner's equity who's leaving is a check in this agreement. Here's your $100,000. You've got your half. Plenty of cases I run into where I'm talking to folks and the person who's staying may not be able to qualify, right? Maybe it's a smaller amount. Maybe the person who's staying wants to take out a home equity line of credit for $40,000 and give it to the person who's departing, the spouse that's leaving and no longer living in that house. Different options there, but in a lot of cases, there's a lot of equity in homes that has to be split. It can be a cash out refinance. It can be a home equity line of credit. In some cases, what you might see worked out is there's a car, there's a bank account, there's a retirement account. That's all totaled to 100,000, and there's 100,000 equity in the house. You get the house, I get the other stuff, right? That's all going to be worked out. I'm trying to speak about just what the mortgage options are, right? Some cases there's no mortgage option, and the best case for everyone involved is just sell the home, right? Sell the home, you take your half, I take my half, go on our merry way. Then it's just a matter of, if somebody wants to buy a future home, let's see what you qualify for individually. Let's see what you qualify for individually. So that's certainly an option. And in some cases, it's keep the home, keep the loan. You might have it just in one person's name on the loan, so there's no need to get somebody off. Because if you have two people on a loan, a lender's not going to allow you to take somebody off. You have to refinance to pull somebody off. But if the person who's staying is the only person on the loan, but when you bought, you guys both were on title, both have ownership of this house, that's where the grant deed, where the person leaving can sign off and say, I'm signing off my ownership interest in this home. And then that person's off the grant deed. They were never on the mortgage, so there's no issue with both people owing, because, let's be honest, it can be messy, and you don't want to risk your financial future, your credit, and all that by being liable for a house that you moved out of 18 months ago. It's not always possible, right? But for sure, it's something that you want to look into. It's something you want to discuss. Don't be upset if you're going through divorce and you can't do this stuff right away. Meaning, in the marital settlement agreement, this person's keeping the house. They're responsible for the mortgage. They might have in the agreement, if and when they're able to refinance and take that other person off of the loan, they will, right? And for a number of different reasons, they don't qualify now, but they will in the future, right? That's fine. Ideally, the person's still paying the mortgage. You're not messing up the credit of the person who left. But anyhow, that's just a few different scenarios. If you have specific questions, please feel free to reach out. Me and my team are happy to help. We know it's a tough time. We know you got a lot of stress, and a lot of other stuff going on. We don't want mortgage to be one of them. Go to greatmortgagebroker.com, fill out a form, let us know where you're at, how we can help. We'd be happy to look at your scenario, help you talk you through it. One last thing on those things is, before any of the settlement agreement is inked and signed and everything's final, there may be some extra kinks in getting loans done. But whatever the case, there's 1,000 different scenarios. We can talk through your specific one and help you. Greatmortgagebroker.com. Go there. Hope to talk to you soon. Until next time, we gonna see.